Commander.
There he is, Watch Commander. What's going
You
on?
guys are late. What's going on? What kind of shop you're running over there? Jeez.
Yeah. Sorry about this, Fari. What's up?
And that's okay. Let's go on. Let's move on. Hey, the keyword is Netflix. Hello.
Are you playing this?
412, trading at 412 last I checked.
Where is it going? We want to know where Netflix
Well,
is
I don't
going.
care. We did it. This is the beauty of the whole thing. You don't care where it goes. What you do is you launch it. You turn your missile keys early and it goes boom.
So did you go with the
So what we did was
Go ahead.
we set up a spread and a put spread. Just what we did with Amazon. With a concept, because we use Sigma channels, we know one leg is going to be bad. So we didn't know if one leg is going to be this good. But the leg that's bad, you repair. This one may not need one because of the way it went. Like a rocket. Up 63 handles. Murray, I like that.
So
18%. Even Murray likes it.
So what did you play? What put spread did you play?
I will give it to you right now. Hold on, give me a second. Let me bring up actually the email. And we had we had a difficult time getting in, by the way.
How come?
I'll tell you why. Because I was a schmuck. Yeah, if you look up, go to the dictionary, put in schmuck, my picture comes up. Here, what is that? It's called. Remember, we are not trading size, but we have a lot of members. Hello. So each person, we issue orders per $25,000 of the risk capital. So each order is X amount. But these contracts add up, and the volatility there was too much up front. Okay, the vol structure was such that I look at they have weeklies, as you know. So we took the March trades. Well, March trades were not that liquid, so it took us a little bit of time to get in. But we had on 140 Chicago time. I'm sorry, 150 Chicago time. We issued the first order, which was a call spread to buy 350, 360 calls. Okay, for net at that time was $4.35. Okay, and not to pay over 440. So tight range. Going to keep a leash on this. Remember, these guys have always missed. The last few quarters, I make it on them overnight. As the market opens, they take it away from you because they sell into it because some schmuck and his son have a fight called IE Icon. Hello. They have a fight and this thing sells off, and before I know it, like within 5 minutes, gives back everything he's got. So I said, okay, I'm going to buy a little bit longer and pay a little bit lower vol so I can hold it better, can justify holding it. As I got to run away from me. And let's play both ends. So that was that. That was at 13:49 Central Time. So 150. Okay, at 154, the next trade went out, trade number 497. That said, go and buy a put spread of 330, 320. Or the same expiration, again, March 21st, your regular monthly expiration, and pay no more than 375. And that one I kept up tight, 375 period. Okay, that was it. Those are the two. Well, we had to go the one leg. Now, here's the fear: if you follow this strategy, whichever leg doesn't work, we did with Amazon. You wait 3 days, okay, and then you go back to your Sigma channels, but different strikes to repair the leg you didn't make. See, Murray likes these trades. He doesn't like to have losers. So you win one, and then you go and fix the other one. Are you with me?
Yeah, but does
that make sense?
It does make sense, though. But I mean, if you're buying the
but it's not 100% guaranteed. Nothing is.
No, but if you're
only is death and taxes.
If you're doing the 350, 360 call spread and you paid 375 for it, or let's say you paid $4 even for it, so you're cashing it out.
That's too much. Well, yeah, but that's okay.
I thought you said that you pay no more than 440. I thought that's what you said. So you cash. Let's say you
435. Yeah, 440, 435, 430. Yes, but I realize.
You cash that out for a little over $4 because you cash that out today.
I stand corrected. Normally, when you do a spread, should not be more than 30%. No more than normally normal stress. But because you're doing the other leg and have a chance of you have a less risk. And here's the risk. If you get filled on one leg, you got to run up there and get the other one filled. Because of this stock, You cannot be on one leg, which you do not know, unless you have super conviction or you have some information, but that would be inside trading. We have neither of the two in this case, right?
I
You
mean-
don't have big conviction because these guys, we were the type who would touch, non-public info, right?
Well,
Given that, yeah, allow it to a little bit more. But you should not pay more than 30% or 32%.
I'm just looking at this net. I mean, you're going to make $5.50 on that spread because it can't go any more than $10, right? So you cash that out.
Correct.
And then you're still sitting on that loser, the 330, 320 put spread that you paid $3 and change for. I mean, that ain't ever coming back. You think that's going to come back by March, or are you going to cash that out and just hold that
I'm not
other
touching that. You're not listening. I'm not fixing that. I put another one up. Now I put a spread up here.
Okay.
You don't keep the same strikes.
Okay.
Hello? Light bulbs.
Well, I'm just looking net.
you with me?
I'm just looking net on the trade that you said you did, and there's a little bit of profit. But if you're putting on another put spread, okay, all right, that's fine.
Yeah. Senor, now the rubber band is pulled this way.
Okay.
You wait 3 days and you do the other side.
I got you.
I'm not going to put the spread up today. No. This has got more to go. You got to get to exhaustion.
Okay, let's talk about just the overall market here. You're pretty good with.
But hold on. Before you go there, hold on. Look at the type of a trade. This stock this is. Normally has surprised people to a downside. Okay, everywhere said these guys are done, and this time he runs so much away. So either was not to trade it, okay, or trade it with some strategy where you mitigate getting surprised the next day. Of course, we're still surprised. Well, here's the problem. Here's the other mistake. Here's the one mistake I did. That's for sure. I was too conservative. I picked the signal channels too close. Okay. If I wanted to be more aggressive and give it, this was the first one we did for the season. Okay. I was a little bit, kind of rusty. To put this right, I should remember Monday morning. We got a lot of quarterbacks. Even you could be a good quarterback on Monday mornings. Spoos. Okay. Here's the issue. I should have, including Fari Hamzei, I should have bought higher spread and lower puts. Higher call spreads and lower put spreads. That would be more aggressive. That means you elevate the signal readings you're going to use. Okay. Then my what was in the trade would be very small. Okay. I didn't do that. Next one. Don't worry. There's Amazon coming. There is Google is coming. There is Apple is coming. Same
eBay
strategy.
tonight. We got eBay tonight, Fari. What's your thoughts on eBay? You
I
trade that
don't know
one?
about anything about eBay.
You don't like
It's
eBay?
too small. eBay.
You like the
The two-digit
$400 stocks. I forget.
two-digit prices don't work too well.
You
there.
like the 3-digit prices. That's right.
Murray, this is America. Yeah, welcome to America. Yeah. We like it big. So
You like it big. What about this ISRG? You ever trade that one? Intuitive Surgical?
no,
That's a
please, no,
$500
don't even
stock.
bring it up. No, don't even bring it up.
Oh, you
Please,
got
please,
bad-
please. I'll
Was there a
pay
bad
you.
one on
I'll
that
pay
one?
you. I pay you. Not to trade. Smooth, you had a question for me. Sorry, I interrupted you very rudely. Go ahead.
I was just asking you. Well, I was going to ask you about ISRG, so I won't ask you about that one. But what are your thoughts here? Is oil ever going to make a bottom here? Where you're looking here that we're trying to.
Murray, I
bottom,
haven't.
but
We give you a sell signal. Have we given you a buy signal yet, Murray?
no, we have. I haven't seen the buy signal from you yet here, so it's
There
still
you
waiting.
go.
So you
So
think we're
relax.
going to make new lows? Are we going to make new lows?
Well, where's your pre-market princess? She sent me some stuff to read. Remember last time we talked about Cushing, Oklahoma? I talked about the option contracts. Remember I talked about the bottom is not in? I said the way if you look at it, we have so much more delivery. I mean, so little delivery versus so much option trade is trading. The low is in there. We could get an intermediate bottom and then roll. Remember I said that?
Mm-hmm.
Are you with me? Like 2 weeks ago? Yeah, I said, look at the. I said the put contracts for the February delivery that ends. I think last day of trading was January 20th. I said that's the big say. There's a big tell here. Why? We had too much put contracts trading too far out of the money. Okay, out of the money versus what was available for delivery in terms of open interest in Cushing, Oklahoma. Okay, not pushing, but Cushing, Oklahoma. Okay, if you look at that, that ought to tell you that some of those guys most likely get burnt. That is, we're not going to go down yet. We're going to stop. We're going to roll up, actually. They'll fry the puts and then roll over. That's exactly what's happening now.
That's a great point. Like when the open interest gets too high, and that can hold up or temporarily pause a price, but once those go off the board, that's when you can have the move, right, Fari?
Right. What happens is that you had too much activity. No. You had too much volume versus open interest.
Yeah.
It was just way too much. It was like double the volume. It was trading. Double the OI. It was trading in a day. That means everybody and his mother is out there, or his brother is out there trying to buy these put contracts and hold on to them at 20s. What are you doing at 20? This is trading like 45, 48. And people are holding 20 strikes. Are you nuts? So it's gonna look. The market is there to burn the most. That's what it's done. To evaporate the most capital, which means what? The other side is getting it. The money doesn't evaporate. It goes to the other. It goes from a loser to a winner. You are a good asset manager until you're not. They'll take it away from you. How do they take it away from you? Legally. You put it on the table and you lose it.
We're on the line with Fari Hamzei of Hamzei Analytics. He joins us every Wednesday discussing the markets. Fari, before we let you go, we got the big meeting. We got the big ECB meeting tomorrow with Draghi.
Yes, sir.
Mixed opinions on what he's going to do as far as QE for Europe. Is this something where you just sit out the decision, you play the reaction? Are you going to try and play going into the decision? How are you playing it?
I'll sit back and have Ashraf Laidi tell me what to do. I'll bring an expert like Ashraf, who's a currency guy, and he got smoked a bit last week because of SMB ahead of ECB. That's Swiss National Bank. That fiasco they had on the euro Swiss franc cap that they removed. Remember, for long they've done that. They've kept it there, and that said only a week before that they said. This is typical Europeans. Only before that, they said, this is going to stay. We need this. We won't continue without it, which was to keep the lid on price of CHF, which is the Swiss franc. Because there was such a hurry out of Europe, people were so worried about Euro, what's happening with all the different states, they were going to only a few members that were not Euro-denominated, like Swiss franc. And unfortunately, they had to burn a lot of their reserves to keep that cap in place. Well, it got untenable. So last week, without announcement, they removed it, which, as you know, a couple of brokers got fried. Like FXCM, and there were talking of other ones around. The only one I know that survived nicely was Gain Capital, because they had raised their margin requirements. Well, why did they do that last week? Because they had this ECB. Even Swiss National Bank doesn't know what ECB is going to do and how structured it's going to be. I really don't know. I'm not a currency guy, but I usually, things I don't know, first I admit it, second I go and get an expert and see what he's going to tell me. So in that case, I'm just going to go to Ashraf and say, Ashraf, hey, give us analysis here quickly ahead of it, and send it out to my members and, play it along.
All right.
I think because in a dollar we're somewhat protected, okay? Remember, being a reserve currency, so we're somewhat protected. Yeah, I'll probably, this is the earnings season, I'll just play it along. Probably do nothing different, okay? But I'll try to chase trades and do a little bit better than I did with Netflix in terms of moving my Sigma channels.
Okay, Fari Hamzei of Hamzei Analytics. He joins us every Wednesday and gives us his colorful outlook of on the markets, bringing us wealth of knowledge on aggressive equity options and index futures trading. Thank you, Fari. We'll catch up with you next week.
All the best. Thank you, guys. Always a pleasure.
Thanks, Fari.